Just wanted to create a video that showcased some of the best ETFs and index funds from 2020 and how you could invest in those in 2021. Of course, I'm not a financial advisor, so all the information in the video is strictly entertainment purposes only, and the information was accurate from the 28th of December 2020, so take that into advisement as well. For more information, talk to your financial advisor or personal friend. Okay, let's do it, guys. I couldn't have done a video on ETFs without mentioning Vanguard. Vanguard, of course, have been around for such a long time, and it's almost an industry standard. They're definitely the leader in terms of managed funds. There's been countless books as well written about how investing in index funds and ETFs is beneficial in the long term, more so than investing directly into the companies. The first Vanguard ETF we're going to look at is the Consumer Discretionary, VCR. And this is going to cover a lot of those companies that really thrive on consumer consumption, such as Amazon. And the cost is quite low at 0.10%. They've done a decent year, so they're up 42.9% for the year to date, and they've got an okay dividend, 1.73%. So it's consistent and stable. Okay, not a lot of risk involved in this one. The Extended Market ETF, VXF, seeks to track the performance of a benchmark index that measures the investment return of stocks from small and mid-sized companies. Now, I don't think Vanguard's description of this ETF is very accurate at all, because the top 10 holdings of this ETF is Tesla, Zoom, Square, Uber, Moderna, NXP Semiconductors, Lululemon Athletica, DocuSign, Snap, and Blackstone Group. Now, none of those companies are considered to be small or mid-cap. So you can see that it does give quite a diverse range of some of the really big companies in the world. Now, the cost on this one is quite high at 1%. And the year to date has been moderate with 32.5% return, and the dividend is pretty standard at about 1%. Now, the S&P 500 Growth is an ETF that I've been invested in for the last few years, and it's done relatively decently for me. The performance for VUG is been consistent year on year at around 30%. At a return of 29% this year, it did take a lot to recover from its March lows this year and to get back up to a decent profit. The dividend is not great at 0.9%, but out of all of these ETFs, you're not going to be wanting to get dividend because it's basically nothing. It's just a little bit extra on top. What you're focusing on is the growth. These ETFs are pretty much across the board. They will be in any US broking company. I would be shocked if they weren't. So, of course, they're across Webull, Self-Wealth, Stake, and Tastyworks. Now, for Self-Wealth, you will need to have the US portfolio set up, which doesn't take much. It's just a couple of clicks. But you'll need to be aware of that you'll need to trade that on the US market because these are not offered on the Australian market. Here's a collection of ETFs that I like from Betashares. Now, the first one is Asian Technology Tigers. Being in Australia, I find it quite difficult to get exposure into the Asian stock market. This will make it a lot easier, giving you access to a group of really great Asian companies such as Samsung, Tencent, Alibaba, JD.com, and Sea Limited. The cost is quite reasonable at 0.67, and they have done really well this year with a 51% increase from the start of the year. Dividend average as always, 1.3%. Global cybersecurity is something that is really starting to ramp up now. People are starting to take notice of how important cybersecurity is. So HACK is an excellent ETF to get you exposure into this industry with companies like Zscaler, Cisco, Splunk, and FireEye. Now, FireEye just this week went from $14 and closed out at $22 by the end of the week. So these companies are really starting to soar. So I think having it performed only 24% this year, I think that's going to continue to grow significantly into the future. Now, not many ETFs can say that they give out 10% dividend. Well, this one does. So if you're looking for dividend income, then I'd be looking at this. Not only are you going to get some decent growth in the upcoming years, but you're getting a hell of a dividend. Global sustainability leaders, ETHI, they are quite low costing as well, 0.59%, and they've done 10% this year. Not terribly great, but you're getting exposure into really strong companies around the world, and it also pays a 10% dividend. Sounds pretty good to me. NASDAQ 100, looking to replicate top 100 in the NASDAQ market. Cost is a bit lower because it's more of an index fund, so it's just tracing those companies. They're not selling out of companies and actively managing the ETF. It's more they'll just follow the index. And it's paying at 2.5% dividend. It did relatively okay, pretty similar to VUG from Vanguard, 29%, but it's got a higher dividend of 2.5%. As Betashares ETFs are only available on the ASX, you'll only be able to trade those on Australian brokers. Out of our brokers here, you're only going to be able to trade it on Self-Wealth. BlackRock do an amazing job, and I've only chosen one, and that's one that just supersedes everything else that I've seen, and I just love the sector, and that's in clean energy. So iShares Global Clean Energy, ICLN, has a decent cost at 0.46%, and what a year they've had. 135% year to date. That's incredible. I mean, that's only going to continue to grow as people start to realize that we need to move away from fossil fuels, and are going to start to invest heavily into these renewable energy companies like Plug and Enphase Energy, which this ETF holds a significant amount. Obviously a low dividend, but of course we're looking for growth in this one. It's quite popular, and you'll find it across any of the brokers that we have here. With Self-Wealth, you'll need to make sure you have the US profile set up to be able to trade that one. Of course, I have left the best to last, and that is ARK Invest. ARK Invest have been killing it for years. Catherine Wood heads up as CEO and CIO and manages a lot of the funds as well with her amazing team to produce these ETFs that have simply dominated the market. Now, Catherine basically has a lot of foresight and understands the future of innovation, and that's a really big thing that they drill home. What they look for is companies that have the strong potential to have really big future growth and are quite in the early stages of where they are. So they get in nice and early and they reap the rewards significantly. Now, all of the top 5 ETFs you see here, the cost is pretty standard at 0.75%. And I'm willing to pay for that because look at the year to date on those companies. It's just astronomical. ARK Invest classifies the top 5 as active ETFs, which means they're constantly buying and selling positions all day, every day. Okay, so it's very, very active. There's a lot of work involved, a lot of research that's still being conducted. The bottom 2 are what they class as index funds. Okay, so these are just tracking various companies in those sectors. As you can see, the performance hasn't been as strong because they are just tracking them over the year. So let's have a look at the first one. We've got ARK Disruptive Innovation. Now, this is kind of a catch-all. It has a lot of the companies from the other 4 ETFs as well scattered throughout them. And they've had an astronomical year, 160% year to date. All of these ETFs I would happily put money into because I can only see them growing further into the new year. Next generation internet is, of course, internet-based companies that are really growing and changing how the way internet works and how things are stored and how things are accessed. Now, that's also done 158% this year. Genomic Revolution, ARKG, has absolutely killed it at nearly 200% year to date. That's in 1 year in an ETF. That is amazing. Not only do you have that diversified risk by being in lots of companies at once, you're not just focusing on the potential of one company. Now, of course, these ETFs are a lot more volatile than, say, something like the ETFs in Vanguard that are basically tracking a specific index. These are a lot more active and have a bit more risk associated to them. Autonomous tech and robotics has also done relatively good and 104%. Fintech innovation, obviously a really fast growing sector at the moment, has done 108%. 3D printing, this is the index fund that tracks obviously 3D printing companies. That's up 43% for the year. And of course, Israel Innovation up 35% this year. Pretty great performance from ARK Invest. I love them. I think they're doing an amazing job at their research and just picking absolute winners. They are game changing. All of these sectors are going to absolutely boom into the next year and continue to grow into the future. The top 5 active ETFs from ARK you'll find on pretty much any US trading platform. The bottom 2 are a little bit harder and trickier to find. Webull obviously offers both. Self-Wealth doesn't offer 3D printing or Israel Innovation at all. Stake only has 3D printing. I have requested Israel Innovation to be added to the platform, and of course Tastyworks has them all. If your broker is not listed here, you'll need to check them for availability. Thanks for sticking around until the end. I hope you found the information insightful and it allowed you to see some possible opportunities for you to trade in 2021. If you have any comments or questions about any of the ETFs covered, feel free to drop me a line in the comments. Of course, do your own research as well. There's a lot of information about these ETFs on their websites, so check that out. And I look forward to seeing you guys in the next video in the new year.